All right, let's go ahead and get started. I think people are still going to come in, so let's go ahead and get going with this program. Well, hello everyone, my name is Randy Lindsay. Gabriel, are you there?
And I'm Gabriel Brent.
Good. I'm glad that you're there. This is HAWKEYE Zone's presentation of HAWKEYE Zone's simple concepts to significantly boost your profits. Gabriel is going to be going through the details of the zones. He'll give you the zone theory and why they are important and what they represent. I'll go through some detailed presentation and question and answers on how the zones are actually used in the markets today. And then we're going to wrap it all up with a summary at the end, okay? So without further ado, Gabriel, take it away.
Yeah, thank you so much, Randy. And thank you, everybody, for joining me this evening. So what we're going to be talking about here is kind of my journey through trading and understanding why the market does what it does. We're going to be looking a lot at very simple concepts that I'm sure everybody here has probably heard of before or seen before, okay? But we're going to be applying it in perhaps a slightly different way than what you may have thought of before. So I hope we'll be able to share with you some golden nuggets tonight in our pursuit of trading as we do our thing. And yeah, so as always, please remember that with trading there is a substantial risk of loss, and I recommend that you perfect your trading strategy in a sim account before trading any live money. And as always, past results are not indicative of future profits. So with that being said, I'm going to tell you a little bit about myself. When I first started trading, I looked at the charts and I said, man, this trading thing, it's pretty cool. I just need to buy low and sell high. And I think I can do that. And I found some really awesome indicators I thought at the time that would help me to do so. You know, some different oscillators and indicators, applied them on the charts, and you know, put on some fibs, and away we went. But guess what? Lo and behold, they all lost money. And that didn't work so well. So I was like, you know what? I need to rethink everything. What really moves the market? Not what moves the market, but why is the market moving? You know, like, where are these different areas coming in, and why are they here? Like, that's all great that my simple moving average is up and moving up now, but why is it moving up now? Like, what caused price to do that? You know, so looking at it from a pure price action standpoint, from a bar by bar analysis, looking at what goes into a bar, looking at the volume that goes into a bar, we've come up with some really interesting results. And I truly believe that now, after watching this for years, that the simple concepts of supply and demand can explain 90% of the price action that we see on our charts. Now, I know that's a bold claim, but when you see the amazingness that I've seen, it's pretty hard to deny, okay? So what are we looking at here? Okay, what are the zones? The zones are market events. They basically keep track of when volume and price action move, and when the market fails to do something, or when it does something, okay? It's going to identify consolidation for us, okay? Now, as we're using these advanced data mining techniques, okay, and basically putting all of this price action into a nice, neat database, which I'm sure many of you here are probably familiar with. Okay, I'm seeing some people that say that there's no sound, but I sure hope everybody can hear me. Randy, can you hear me okay?
Yes, you're good, and I'm already taking care of that. You're very good.
Okay. Sorry. But as we're looking at price moving up and down in our marketplace, what these zones represent are these market events, and our software keeps track of these events and where they happened in the past, so that as they're plotted on the right side of our charts, they keep us forward-looking at where is supply and demand really kicking in. You know, it's way too easy to say buy low and sell high. That's all you got to do. But if you have no context of where high and low is, that's an impossible task right there. You know, so we're going to be keeping track of the supply and demand, support and resistance as it moves along throughout time. Okay. Now, all the zones in red that have the red text by them, those are all supply or resistance zones. All the zones with the green text are demand or support levels. Okay, so very basic. Now, as price interacts with these zones and it fails to break a level, it's going to turn the zones these different colors here. All right. Now, the reason why we made these different colors is just for all of our slightly colorblind people, friends out there. If you have any problems with colors, I made it sure that it was a value shift for you. Okay, so now that we know where these levels are and how support and resistance and supply and demand is identified with the software, and again, this is just basic zone theory, we're going to keep track of them, okay, and so then as the trend develops, okay, we know how to historically identify these consolidation areas, okay, and in the present, we're going to use these areas for support and resistance to be able to jump onto the trend, because everybody's seeing the trend develop kind of after the fact a lot of times. And I don't know if you've ever had that feeling of chasing the trend. Okay, if you've ever felt like you're chasing something and you're like, man, I really want to get in, but I just don't know how, you know, well, more than likely you should probably wait, okay? Buy at a level of support, buy at a level of demand. And it's really easy to say that, but if you don't know where those levels are going to be popping in, and I would like to say that, you know, these are just lines on the chart, but the practicality and the reality is there are so many market participants, there's so many big institutions out there moving price along that we need to jump on the coattails of those big institutions. So these levels help us do that. So it's not just a line on your chart, it's not just a support and resistance line on your chart, it's a real level. Where more than likely are you going to be seeing a good area to jump into the trend? Okay, so here with the HAWKEYE package, we can see that the trender is starting to turn green, and you can see the green diamond, or excuse me, the green dots being plotted here as we're leaving the yellow zone. Okay, so by that zone being yellow, we know that price is retested and it said, hey, this is true support at this level. Right, so that's what that's telling us. And for all of you equation buffs out there, these levels are, it's not just support and resistance, it's not just supply and demand, but it's also time, okay? Time plays a big factor in this. Let's think about it. We have an X and a Y axis on your chart. You have a two-dimensional chart of price data that your broker gives you. I think it's about time that we let both axes really give us a in-depth analysis. So this is how we put it into a nice, neat equation. Okay, how long has the zone lasted on your chart? What time of day price interacts with the zone? Okay, so all of this being said gives us an understanding of context. Okay, context to avoid buying into the highs of the day and avoid selling into the lows, because we know where the range is. We know when it starts trending where we're likely to experience a stall in price action. We can see these things, and we can see multiple time frames all working together. For a case in point, we have a 60-minute chart, 15 and 5-minute charts, and you can see the brown level. Brown level, if we go back a few slides before, brown levels mean that price has been there 4 times or more. So we know that this level has been retested. And the big institutions pushed it above a little double top. If you guys are familiar with reading price action, you might recognize this as a double top. They pushed it just a little bit above the double top. Therefore, hey, you've made a new high. Congratulations. but you did not break the supply area that is a fractal confluence in between all three of these charts. Now this zone just happened to be 4 days old, okay, when this price action happened here. Price just ticks above it and then it reverses hard back to the next brown zone below it. The trend continues, or maybe some people might call this a range play, but we can see why price was doing what it was doing. And I think that's the very important factor, because when it comes down to it, we're all risk managers. We're all trying to manage our risk. So by using a multiple time frame and by using a 5-minute chart to enter on, we can mitigate a lot of the risk, so that even though we're maybe taking this entry off of the 60-minute time frame, we can still use small stops and small targets in perspective of our trades, okay? And the zones help us mitigate that risk by using a smaller time frame, all right? So another example, big context, big swing traders. How many of you here are swing traders? Okay, I see a few of you. All right, so for all you swing traders, weekly charts, daily charts, yes, this works just the same. This is all based upon fractals and actually some pretty sophisticated math when it gets down to it. It has actually led me to, this study has led me to meet a former astronaut of the NASA space program, and just a really cool guy, and in studying the fractal patterns of what's going on here. The fractal patterns are absolutely amazing, and when you understand them, they're used in so many different ways that you would not even believe, and it's really, really cool stuff in the background. So anyway, this zone is 7 years old, okay? These weekly levels are 7 years old, all right? And I think that's absolutely amazing, because if you look at the daily picture, you can see that inside this weekly level, there's a brown daily level. And you can see price like just barely kissing that weekly level and then popping off of it. Like just that amazing kiss right there. It's like, wow. Look at that. Look at how price responded to that level, even though it's so old. Absolutely amazing. To me, that just really shows how well these levels work, okay? And then it comes down into this level a little bit lower. It looks like the trend is still down, and you can see as we go into a range period. So we're moving from different phases. We're moving from a consolidation phase to expansion phase, and now we're into a range phase, all right? And we can see where the top of the range is, where the bottom of the range is, you know? And as the supply and demand curves shifting over time, we actually can see new supply levels being formed for us, okay? And the software keeps track of all of this stuff for us. So how do we put this all together, all right? How does this all work together as one, all right? Well, that's a good question. And before I think we get into that, we need to look at time a little bit. All right, because remember how we want to use both the X and the Y axis, right? Okay, so looking at time, I found some very interesting things, and this is the HAWKEYE time tool, all right? Now, have you guys ever wondered like when you should be trading and when you should not be trading? Because timing is really important. I mean, like getting in and getting out is extremely important, and that's how much time do you spend in the markets, all right? So by developing this time tool, what this does is it identifies the important times of day that you really should be looking at your charts, because what happens is, let's face it, we're all creatures of habit here. How many times well, I don't think that that's actually a fair question, but let me ask this instead. How many people here eat breakfast at the same time of day? Probably quite a few, right? We eat breakfast, we eat lunch, dinner, all at the same times of day. We go to work at the same times of day. Some people don't eat breakfast. I hear you. So some people don't have time for food. that works too. But for the most part, we are creatures of habit. You know, maybe you go to bed at the same time of day. How about that? So, but anyway, thank you guys for participating here. It's absolutely awesome. But as we look at this stuff, you know, we are creatures of habit, and either consciously or subconsciously, I think that is actually happening on our chart. So for our entry time frame, for our like 5-minute charts and below, we've developed this time tool to help us enter and exit a trade based on time. Okay, so that when we put it all together, we can be using the zones, the time zones, and the price zones to be entering a trade. Okay, so we can put our stop on one of two places. We can either put it on top of that wick right there, or we can put it on top of the blue zone. Now, as price interacts with an aqua zone, okay, so when that wick went into the aqua zone, it turned that zone blue. You know, it did take a couple bars just because we want to make sure that price is actually respecting this level. Okay, but when price is bouncing off of that blue zone right there, we call that the money bounce. And this is an amazing trading opportunity. Money bounces on zones, well, there's a reason why we call it the money bounce. Need I say more? But just to show you a little case of example, you could enter there, okay, after that candle's formed, and then this was actually a trade that I took. And if you look at the little 20 there, that is how many ticks for T1, then T2 down there, and T3. Now, how am I arbitrarily putting these levels into place? Like, why am I taking the targets at those areas? And that's a good question. And the reason being is because we're using the zones not only for the entries, not only for the money bounce, but also for the targets, okay? So that as price is moving along in a trend, we can see price bouncing off the zones. There's another money bounce, lo and behold, and there's a zone, and there's a zone, boom, boom, boom. As the market's trending, it looks like this so much of the time. It's absolutely amazing. In fact, today, we'll see real live examples of this happening today here in the indexes. It was really, really cool and absolutely awesome. So that's how it looks when it's all put together, okay? So speaking a little bit more about targets and how to use the zones for targets, I like to, now this is just my personal choice or my personal trade plan, if you will, but I like to take a real quick first target, okay, and I call it a scalping target. It's a first sign of support and resistance as it comes into place, okay, and again, these zones help us identify where that first sign of SR is going to happen. So for me, this has been pivotal because by doing this, this creates a stress-free trade, okay, and once you're into a stress-free trade, your whole mindset changes. All right, I'm not going to get too deep into that, but we'll talk more about that a little later on in other videos and things of that nature. Okay, so then the second target I usually use from that multiple time frame type of perspective, from like a 15-minute chart or a context chart. If you're swing trading, maybe that's a daily chart, or maybe it's just a bigger time frame. And then a third target, looking more for the supply and demand as it jumps into place. Okay, so those are the ways that it looks. And if we're really going to look at kind of a before and after of how this stuff lines up, here's a before and after type of trade setup for you guys. Okay, so again, money bounce, ba-doom, right there, real quick, and we take off our target here. Now, you know, this is a yellow zone, right? So price has retested this zone at least once. Actually, it says twice, okay? So because it's retested it twice, I use the next zone just above that, and I like to use one tick outside of the zone, okay? So excuse me for just a second, guys. Okay, so that's I use the zones for a target here. And then the next target up, you can kind of see the Y value says 47 and then 70 at that purple zone all the way up there. And you can kind of see how this looks as well over here on this chart. All right. Now notice this. Notice this yellow zone and where that is, and look at where this purple zone is. This is called a flip-flop. All right. This yellow zone has flip-flopped from these two charts. Okay, all the zones, the other zones have remained the same. The purple zone is now brown, but there's something magical happening here. We're going to talk about that a little bit later. All right. So with that being said, I don't want to take up any more time going through just normal slides. I want to get into real-world examples of how this stuff can help you out. Okay, the zones obviously can act as support and resistance. They can help manage our risk for our stops, and they can help us take better targets as we're looking at the bigger moves. You know, where is supply and demand, support and resistance coming into place? So with all that being said, I'm going to be handing things over to Randy to actually give us some live examples of today, like when it was trending today at the very beginning of the morning here in the U.S. indexes. Absolutely amazing stuff, and it is so cool.
I'm going to go ahead and start off with NinjaTrader, and once we have other questions about things, then we'll pop over into some other charts. But I want to make sure that we have the concepts down and demonstrate those. I'm showing the NinjaTrader platform. The other software you see in the background is the HAWKEYE tools that are developed, but let me show you another chart here with just these zones on it. So let me pull up a new chart. I should have already had that ready, but I apologize for that. Okay. All right, so you just have a plain, clean chart, and then you pull in your indicators. You go down to your HAWKEYE tools, your HAWKEYE zones. You add that to your chart and pop it on, and then there you've got a 5-minute representation of the zones. This is a futures contract. You can also do this on any of the Forex contracts as well. You can see the zones apply and plot on the screens perfectly fine. You can also do this on any chart. If we pull up, say, Apple, for example, then you can see that stock options, so forth, all plot perfectly well within the confines of these zones themselves. Okay, 5 minutes. If you wanted to plot a 1-minute chart, you could also go out into a 30-minute, 60-minute chart. Need more data on this. Looks like I only have 5 days, so it looks like I'll have to go out a lot farther. There we go. Probably need to put in a whole lot more data than that too. So you can see that the zones are perfectly in tune to the markets and the time frames that they're trading at. Even if you wanted to go out daily, weekly, monthly time frames, you're not constrained by the charts. Tick charts, absolutely. Renko bars, range bars, absolutely. There's no constraints as to the time frames that you're using to show and display these things. So if I were to put in a 5400 tick chart, then 5400 ticks pull in, the zones are displayed on a very nicely drawn tick chart as well. All right, so as far as the zones are concerned, then you're looking at the we're looking back to that, and we can see that that time zone has price traded right up into this area. You can see when support is created, when price trades out and comes back up. Why? It retraces back into these support areas. These zones are here for quite some time, so these are like forward-looking, predicting time price zones that price tends to retrace back to. And what Gabriel had referred to earlier that we call the money bounce is illustrated here beautifully, where you see price coming out of a brand new zone that was just created. This zone is then in time drawn out, and then as price comes out and retests this zone, this presents for you, the trader, the highest probability reversal point of the thing. That's why we like to refer to that as the money bounce, because it turns the aqua-colored zone into this blue-colored zone, showing that it has been hit by price one time. Each one of the zones, if you look at the indicators, have different color combinations. Aqua shows a brand new zone. Blue shows the first bounce. Orange shows your second bounce. Purple is third. Brown is 4+. And then all the dead zones are black. So what we're looking at here is the ability to see the interaction of price with volume or with these supply and demand zones in real time. And these are dynamically updated, so it will automatically change color, and it will automatically change and create zones for you as it goes through time. Okay? So, and here's a good example of it. If you were to look at this same chart on a longer time frame chart, then this is a 240-minute time frame. Here you can see a purple zone overhead showing overhead resistance. You can see the blue and the orange zones showing the support levels. And you can see how during the normal trading day, how price came up, found sellers, okay, up in resistance areas, came right back down and pushed to a known support zone, which you already knew was there, which you were looking for as take profit points. Now you can see buyers popping right back up in with a known future target coming up into this as a target zone. So you're targeting a 1928, 1926 area as a zone upside target with an as potential secondary target of 1944. Okay, so that's just a quick example of what it looks like here on the platform. All right, so there's also questions. Does it work on TradeStation? Absolutely does work on TradeStation. Let me pull this up and show you. This is another one showing the S&P daily and the pullback that you've seen. A lot of people are watching this. They put their Fibonacci's on to find the corrective of pullback, but you can see the zones have already shown you a nice range of pullback. So the price came out, came right back up, initial bounce, price came right back down, hit the zone, and is starting to trend right back up again. So if we hold to the 1950 46.85 level, 1980 is the next longer side upside target if we're looking at that. Okay. Dave, sorry, it does not work on TC2000. It does not work directly on Thinkorswim. However, there is a workaround for those of you who are using Thinkorswim, that if you're using the NinjaTrader platform, you can link in your NinjaTrader TD Ameritrade account. So if you go through your tools and you look up account connections, you can have a linked TD Ameritrade account to your NinjaTrader account, and you can trade your TD Ameritrade account directly in NinjaTrader platform. But this will only work for your stock or equity positions, and it does not work for Forex or futures traders. But it will work for your stock trades. So you want to make sure that you understand that. It does not work native or directly on Thinkorswim, but it will work with your TD Ameritrade account within NinjaTrader. It does not work with Metastock, no, or Sierra charts, sorry. Does it work with MetaTrader 4? Absolutely. Here's a MetaTrader 4 platform right here. I've got set up for you, showing these zones on a 1 minute, 4, and daily chart. I mean H1, an hourly, a 4-hour, and a daily. I've also got one set up where I'm looking at scalping. Here's an intraday chart showing a 15, 30, or hourly chart. And here's one showing the scalping time frames as well. 1 minute, 5 minute, or 15 minute.
Now, just real quick there, Randy. I think this is really, really cool. But I was wondering if you could actually do a favor and let's show them a little bit more of the functionality of the zones.
Okay.
If you don't mind.
I'll be glad to.
On that 1 minute charts over there on your left, could you right-click and go to your settings and then show the dead zones?
Absolutely.
Now, what we're going to see is something that I like to call the flip-flop trade, okay? And that's the color, and then there should be the turn it on and off down below. Yeah, there you go. So what this is basically as supply and demand and support and resistance flip-flop throughout time, we're going to see that happen on our charts, okay? So you see where that gray zone is from like 17, nope. Stay where you were.
Okay.
Okay. Oh, sorry. You're just moving the charts. I can't read the prices. But you see where that blue zone is formed right there. Okay, at 17 or 117 up to 117.95. So just above that is a zone up there. Okay, it's a gray zone that is on our chart. So we're actually looking at kind of a flip-flop of price action as it moves over time. And the cool thing about that is when you see the flip-flop happen, a lot of times that can be the money bounce to help us join the trend, okay, as it transpires here. I don't know if that makes sense to everybody, but this is a real-time indication of, because it's on the minute chart, this is support and resistance. Okay, if it was like on, let's say, a 15-minute chart, that's more of your supply and demand in this context of day trading these forex markets. So basically, it flip-flops from old resistance to new support. We get the money bounce off that blue zone, and price fires off there like a rocket. You see those big, huge green bars? Absolutely amazing stuff right there, you know, and it goes up to the next zone, it kind of pitters around, now we're into the brown zone, and look at that, we're retesting the aqua level now. It's just absolutely awesome. Now we should retest the high again, okay, from after retesting the aqua level. Okay, so we'll be watching that as it transpires here, but this is the way the zones work. It's just simple support and resistance, supply and demand happening in real time for us. Okay.
And I love to see the higher time frame confluence play out here, because when you see this zone right here as overhead resistance, then I look over here at my 15-minute chart and see that price is hitting the same zone, but yet it's on a 15-minute time frame. And so I'm seeing that these zones are in confluence with one another, and that I'm seeing the exact same price action in the same areas going on.
I just think that is the coolest thing. And I even designed the software, so it's kind of crazy how that works. Like, it's
a lot
really
of times if you see price coming down into these stronger support or resistance zones, then these are the areas where you're looking for price to start either showing reversal trades, or you're looking for price to start trading in the opposite direction. So when you see selling action coming into these regions, and then you see price starting to pull and reverse back up with strong volume, that's when you decide that's the trade you need to start taking. You either take the trade in the zone as it's hitting and then set your stop just outside the bottom of the zone, or you wait until you get your first confirmation bar after it leaves the zone, enter your trade, and then take it to the next zone of opposite type as your target profit. Take profit point.
Well, we had an interesting question here about days to load for the zones to work. That's actually a really good question, an interesting question right there. The software is highly highly related to how much data you have loaded on your chart. It is a data mining tool. Therefore, data is kind of mandatory. So the more data that you have loaded on your charts is going to be indicative of how many levels you have on your charts. Okay, so I would say for the most part on your smaller time frames, I don't really like to go beyond like 30 days. And when I say smaller time frames, I'm talking like maybe like a 5-minute charts or 1-minute charts, just because there's a lot of data mining going on in the background, and it takes a lot of computer processor. I mean, your computer processor will be stretched if you load, well, it will actually, I've seen it actually completely bog down some i7s if you load a year's worth of data on a minute charts. And that's just because you have so much data to process and so many data points together. You know, that's a huge amount. So, you know, like 30 minutes later, if you ask for that request, come back 30 minutes later when your chart actually reloads again and you're off to the races. But that's just a general idea on what kind of data should be going on. But on the bigger time frames, like 60 minutes and above, you can easily put a year's worth of data on a 60-minute chart, and it shouldn't be slow at all.
Good. Thank you. Thank you for that. Get a lot of people saying, does it work for futures? Does it work for futures? I was showing futures earlier, but there were a lot of questions with regards to Forex too. So we were pulling that up to show that, and also showing it here on the MetaTrader 4 platform, showing it working in these time frames here. So absolutely, I've got a setup here on Ninja showing that it is working on the S&P 500, the ES March contract currently. So you can see price trading off on that, and you can see it coming up into overhead resistance. A break of this zone right here will bring us up into the overhead resistance here, but if you look at the longer time frame, then you definitely are going to be expecting that to come back up, and to see that. You can see the overhead longer time frame that we are looking for is 90.46. If you're looking at your Fibonacci's, then of course you can always look at the interaction there. You can see the hot spot Fibonacci zones are right inside the pullback range of price. So you can see the HAWKEYE zone is giving you these very nice retracement levels. So once you see this line broken, you can see that the next zone is going to be right close to the Fibonacci tool as well. So they're very well aligned with that as well. Okay. So either if you're just trading just with regular price, then absolutely the zones work on any of the time frames, whether you're looking at tick charts or time charts. Here's an example of a tick chart. And now, because one I've got with the zones loaded on it. So I'm looking at the software that we use is HAWKEYE. HAWKEYE software works beautifully with the zones, but the software is not included as part of your zones. If you were to purchase the zone software, the trend and volume software is a separate purchase. But I'm showing you the zones on the tool as it works, and so you can see as price moves down into support, as it comes back out and confirms it is moving in this direction, the HAWKEYE software gives you a clear indication of when to enter the trade, and then you trade these as you see multiple support and resistance levels are coming into play here. As you can see, these multiple resistance levels, when price reaches a pivot point, retraces back down into the supply. I'm sorry, I say into supply, I meant into the demand zone. Then you see price bouncing right back out. This is a continuation trade. Congestion entrance, continuation trade, breakout, and price is continuing to move to overhead resistance or to supply. And that's the idea behind that. You can absolutely trade the software apart from the HAWKEYE method. I'm just showing you the example. So if you were to pull up just the plain Jane chart itself, then absolutely the chart trades in that just fine. Let me see if I can pull up that clean chart again. Did I have that up on here? Tick. There it is. So, what were we looking at? What time frame was that? It was a 60-minute. Okay. Make sure my data is, we got 5 days, so let me pull in a good 60 days of data there. All right, that looks much better. Okay, so that looks very much in line with that. So looking at a 60-minute chart, you can see that that time frame is a little bit long to capture any of this data. So if you were to pull that back down into a 15-minute time frame, which still looks a little bit long. Now you see why we trade with tick charts. A lot of times tick charts will smooth out a lot of that process and give you data. So if you're looking at, say, a 2500 tick chart, then 2500 tick chart will show you a whole lot more resolution as price comes back down into the support and then starts showing closing outside of the corrective move. You can see those are clearly entry points for that. Target points, this you can see this has been here for quite some time. So this will be your overhead target. When these previous resistance levels form, price comes up and back down into them. Those are just re-add or entry points if you missed the initial trade.
Well, I see some questions about settings of the zones and things of that nature. Just so you guys know, we have a wonderful video library that has videos on recommended settings and a few different trade setups like the money bounce and the flip-flop trades, things of that nature that will give you tutorials on how to do them. So I would recommend looking at the video library.
Absolutely, which is in the members area, which is included as part. Let me make sure I pull my data in. Crude oil.
And as far as showing trades and things of that nature, we actually do have a special training session lined up here for you guys to attend and to see this stuff in live action and to join us in the live training and real market application. So, but we'll get to that in just a little bit here.
I wonder why crude oil is not pulling up for some reason. Let me show it over on TradeStation, see if it pulls up there. I want to see a 3-minute. There we go. All right, so here's the 60-minute setup. So I like to have the zones on the 60-minute chart because what the 60-minute chart shows me is, it's like a price magnet. These zones are very well behaved around 60-minute areas, and so what we're looking for is price interacting between these areas. So why this morning does price open up and then trade down into known regions? Why this morning when price opened did it open back up and correct back up to a previous supply zone? Those are almost answered as obvious questions when you see the overhead chart, but then this gives you the overall direction. So when you see the 60-minute trading in a specific direction with a target, then when you trade the faster time frame charts, then you're looking for that. So let me turn on the zones here on this chart and then show you back the opening of this morning here. So pull that right to this opening part. So you've got the opening of the market right here about 8:20. Okay, so you've got price coming right back down, forming a new zone. I'm going to have to look back at much more data if I'm going to be looking at the, so I've got it set to 2 days back. I'm going to have to look a lot farther back than 2 days if I'm going to do that, but this is going to pull in a whole lot of data. So the more data that you have, the more clarity you will have on prior support or resistance. Okay, so pulling this in at the open, you can see price coming back up in, forming the zones, retesting it, bouncing right back out of it, forming a zone, coming up, retesting it, bouncing back out of it. It's very easy and clear to see, and the color codes give you that valid settings. Why does it stop right here? You know, this is a value that we've seen here for several days. Price came to this point, had to test it, pulled back, and now is giving it a third test. So obviously the software is compatible on all time frames. So that's the forward movement of that. I like to trade only in the direction of my 60-minute chart if I'm trading my faster time frames. It just helps me to keep my trades in perspective and keeps me from over trading as well. The orange zone pretty large. It looks like it's about a 40-cent zone right here. This orange zone is, yeah. That's right, it is. So let's go ahead and I'll go ahead and I've shown everything for now. Let's go ahead and make our presentation, and we'll get back to the detailed questions and answers after that, okay? So let me pull this up. So the zones, what's included? The zones comes with the HAWKEYE zones themselves. It comes with HAWKEYE zones time. You get full access to the HAWKEYE Traders membership site where you can download your software immediately from the membership site. You also have full user documentation. You have a full library of training videos specifically on setup and use of the HAWKEYE zones. You get free product updates. You get free customer support. Right? All this is a one-time fee. So once you pay for this, you get the software, access to the software for life. You get free product updates. So when we update the software, we update it in our members area and then send you an email to let you know that you can come download and install the newest version of the software, just like that. In addition, Nigel Hawkes himself will be giving a live 2-hour training webinar on Wednesday, February the 17th at 12 noon. Which will be recorded and made available to you in the members area if you aren't able to make that training. So come into the training, and Nigel himself will be training you on how he uses the HAWKEYE zones in his trading. Okay, today and today only. Well, for the rest of the launch here, we retail the HAWKEYE zones for $1,000, but today we're making it available to you for $697. And the link that you see, there's right there, HawkeyeTraders.com/target. TARGET. You can order by phone as well, 859-963-3445. Secure your own copy. HawkeyeTraders.com/target. Let me make a copy of that and put it into the chat area so you can click on that. There you go. There's a question that James asked, how long does it take to learn this? It varies based upon how quick you are to learn. Some people catch on to the concept very quickly and are able to turn around and make good use of it. Others take several weeks to learn the concept and then start using it in a trial account or a demo account before they actually start trading with live money, which is the preferable way to do it. So I would definitely recommend you take the software, you learn the software by applying it in the markets in a demo account before you actually start applying it in live money. Okay, so HawkeyeTraders.com/target. That'll give you to the buy page to give you more information about how you too can purchase these zones today for our special webinar price of just only $697. Greg wants to know how many computers he can install it on. It depends on the platform. If it's TradeStation, you can install it on your laptop or your desktop computer, a work computer or your home computer. Same with MetaTrader 4. They are linked to the same account. In NinjaTrader, you're limited to only 2. So you have 2 separate machine IDs that you can link to the software. And that again is for either a laptop or a desktop or a work or home computer. And those are all included in the purchase. That's right. If you do need help, then HAWKEYE makes available a Fast Start program. For $65, they will provide you with a fully trained technician to come in, take over your machine, install the software, get it all set up, and make sure that you're happy with that. It's a very simple install and download, but if you do need help, we do make provision for that. So you get a full hour of install for $65 extra. It's called Fast Start, HAWKEYE Fast Start. And if you need that, it will be available to you as well. Explain how to connect to thinkorswim. Okay, I'll be glad to do that. Let me pull that up. Okay, on your control panel in NinjaTrader, you go to your tools under Account Connections. Then you set up your account connection here, and I'll go through very quickly just to show you. Click Add, click Next, give it a name, and I'm going to call this your TOS, thinkorswim account. From the provider, just simply click on the provider list, go to the section that says TD Ameritrade Selection. Select that. Okay, you don't need a backup data feed. If you do, you can select a backup data feed if that one goes down. If you can also select whether you want to connect at startup. Make sure you select the Use TD Ameritrade servers for your data, and then that will load the data directly into, and you go click on Next. Then all it needs is the username and password. This is the same username and password that you currently use to log into your thinkorswim application, your TD Ameritrade account. So just simply enter your username and password and click Next, and it will automatically connect that. And so that's what I've done here with my TD Ameritrade account, is I've connected it directly to Ninja so that in Ninja I can trade my stock data, equity data, directly in my NinjaTrader platform from my TD Ameritrade account. And that's how you do the connection. And once you have the data feed in, then you just simply display the zones on your NinjaTrader platform using the NinjaTrader data. No, sir, there are no free trials. That's why we have the demonstrations and the question and answers. So you'll be able to see that. See it working. I see it applied. And all it is just a matter of learning and applying the lessons that you've learned to your own trading. Very, very easy and simple to use, simple to apply. The concepts for some might be a little more complicated, but nothing that a smart trader like yourself couldn't learn in a short period of time. No, once the purchase is made, the purchase is final. That's when we give you a lifetime license. We give you all the time that you need in order to learn and to understand and to use the software. NinjaTrader is a free platform. So you can download NinjaTrader, link with your TD Ameritrade account, and then use that as your data. When will it be available for eSignal? I'm not sure exactly. It's not going to be anytime soon, and it will not be this year, but possibly in the future. It is a possibility. The HAWKEYE tools are all available for NinjaTrader and for eSignal, but not for eSignal. No, you do not have to have thinkorswim running when you do the linking. It automatically will link in the background. If you ask a question and for some reason we have not replied to your questions because there are so many people in the room still that there's just a huge onslaught of questions. So if you could please repeat your question, that would be awesome. We've only got two guys in here trying to answer your questions, so we're doing the best that we can to try to get these questions answered. So thank you very much for your patience.
There is a programming question out there as far as using stuff with the strategy wizard. Yes, all the namespaces and classes are public. Therefore, you can apply them in a strategy building type of way. Also, in the NinjaTrader platform, you are able to access them for market analyzers as well.
Okay. What is the link again? Okay, let me pop that back up for you real quick. There you go. HawkeyeTraders.com/target. Didn't come in as a link. That's okay. And the number to call, 859-963-3445. Ken asked a question, did I say it won't work on futures? No, I did not. It does work beautifully on all the markets, futures, stocks, Forex, equities, ETFs, I mean, and commodities, crude oil being one of those, absolutely. So let me go through those real quick here. So here I've got a futures set up. Got crude oil on this list, but you can see I've got all of the mini futures, the S&P 500. Okay, this is the U.S. bond market. Here's the 10-year. That's the 30-year. Here's gold. So you can see all the futures. You can see all the zones working beautifully for any of these markets. And here's crude oil again, natural gas. Even if you're looking at the futures contracts, so if you're looking at say the euro futures contract, then you've got the euros futures contract as well. Very nice range-bound trading right there. Look at that. Let me make sure that that's linked. Can I show the spider? Absolutely. Let me pull that over here on a longer time frame. There's this today's. There's the spider. Longer term, we're looking at the daily, weekly, monthly. Can we pull that up? Absolutely. The zones work beautifully on weekly charts as well. Yeah. What are the yellow trend dots? These yellow dots right here are called HAWKEYE pivots. Okay, they show the isolated high or isolated low points in the market. Whenever you see an isolated low with opposing volume in a known demand zone, very, very high probability of reversal right there. Beautiful, beautiful setup on that for reversal points. Yes, we teach those, absolutely. That's part of the training. The success rate of the software is very, very much dependent on the trader themselves. So it's not a closed-in system. It's very open-ended. Without it being closed-in, there's no way that you can concisely give an accurate representation of how well it's traded. So it's always going to be a function of the trader. Can I look at Google? Absolutely. Let's pour myself a little bit of water because my mouth's really getting dried out.
Hey, I have a quick question here as well. As far as what is the expected number of times you can expect to see price retrace into the zones before it no longer serves as support or resistance, please look at your definition of trend. And if you have a good definition of trend, the zones will hold for multiple bounces. And when you come into a range market, you can expect to see, kind of like in one of those previous slides that I was showing, you can see where the range was forming because support and resistance zone was trapping price on the top and the bottom. That happens a lot throughout the day as we go from range to expansion back to consolidation. So I'd recommend just looking at trend. So sorry if I interrupted you there.
No, that's perfectly fine. I'm glad that you did. Someone wants to see the S&P on a 5-minute chart. So here is the S&P. I currently have it on a 3. This one right here should be a 6-minute. Okay, so this, I'll make it a 5-minute chart. So I have my zones on it, and I'll expand it out so you can see it clearly. And I will pull down so you can see where the overhead, either supply or demand is. Now you can see that the zones are easy to see which one is supply and which one is demand. You do that by looking at the right-hand side. The colors identify which is which. A green number on the zone will show you where the demand zones are, and red values on the numbers show you where the supply zones are. Okay? Support, resistance, demand, supply. Okay? Okay. Someone else asked a question about the S&P tick charts. Okay, we're looking at these tick values. These tick values are chosen based upon one of HAWKEYE's other tools, the HAWKEYE gearbox. It tells you the optimal tick speeds to use on any particular time of day, and so you're looking at the overall trend of expansion or contraction of volume. So you're looking at that. So these values tell you which speeds to set. So this 3704 tick chart was simply the tick speed that was set up to use for the longest time frame on a given day. That's all. Boy, he is repeating his question, isn't he? Gee, I got your question. Okay, what time zone is the chart with the gray lines? You know, there are gray lines. I'm not sure which one you're referring to, gray lines, but maybe that was MetaTrader 4. The zones, let me see here. Is this the one, the dead zones? Is that what you're referring to? Your question is very cryptic. It's not easy to answer.
Oh, they're talking about the time zones. So go put it on a time zone chart.
Yeah,
that's probably what they're talking about.
Yeah, it is on this one right here. Let me turn the zones off there. Okay, the time zones are on. I just need to go to a time where they're actually displayed. There they are. Let me pull this snap off.
Yep.
There we are. So there are the actual time zones on the chart itself, and its interaction with the other zones themselves. So you get a nice little checkerboard pattern there.
Now, something that's really cool that I've noticed with the zones and trend idea, I know that we've had a few ideas of, a few questions about trend that I've been trying to answer. For the most part, when you see 3 zones in one direction that are all new, like all aqua colors or blue color, that is a good indication of a trend. Mm-hmm. Okay? So you can kind of see how that stair steps up to the upside there. Mm-hmm. So just a real simple way to define trend on even a smaller time frame. Mm-hmm. And I know that sounds really, really simple, but it's actually really amazing how well that works.
Data window. Where's the data window at? How do I show data window on MetaTrader 4? I never do that. I thought I could show it here. Data. No. There it is, right there. Data window. So it doesn't look like there's a value specific to the data window there, because there are too many zones displayed.
Yeah, I don't use MetaTrader very much myself. Use a lot of Ninja, but yeah.
I was able to find it.
Yes, the zones work on futures, Forex, options, ETFs, stocks, anything that you can get into one of the supporting platforms. The zones can work on it.
A pound Aussie chart? Absolutely. I might actually have a pound. What time frame are you looking for? Sharon Gabriel is the author of the software. Yes, he is. Five minute? Okay, 5 minutes. So you want the pound Aussie. So I can find it on there. Pound. Is it? There it is. Pound Australian right there. I'll pull it up on a 1 minute chart. Wait for the data to come in. We'll pull it back down again. Oh, I think I messed it up.
So apparently, Randy, you sound like Ben Carson.
Who? Ben Carson?
Yeah.
I'm not running for office. Here's a 5 minute chart of the pound Australian there for you. I did not know that. I like Ben Carson, actually. Yes, Chris, they are tradable 24/7. If you have data for it, the charts will plot. The brown resistance means it has been there for a long, that means that price has hit it 4 or more times. And very much like the analogy of felling a tree, the more times the tree is hit, the higher the likelihood that that zone will break. Now, don't know exactly how many times it takes to do that, but that definitely indicates that. So the more times a zone is hit, gives a weaker value to that. But a lot of the new zones, especially on the faster time frames, if price is moving hard, will cut through some of these new zones like a hot knife in butter. So that's indicative of a trend run. A trend will continue to break through previous zones. You'll get a flip-flop nature of the zones because the zones will always form. Prior support becomes current resistance, so wherever previous price action zone was, new zones will form just below that, and they give you the flip-flop nature of these zones. And so it's something that you learn during the training and something that you learn over time, and it becomes a very valuable tool for you. Okay. See, what was that? $1 Canadian, 15 minute.
I just want to send out a quick note that we are getting in so many questions right now that We have like 4 people answering questions right now, and it's still just pouring questions. So we're really sorry if we haven't answered your question. There's just a lot going through right now.
So that's New Zealand Canadian. I want the U.S. dollar Canadian. Sorry, there it is, right there. All right, really big down move on this. So a 15-minute, you can see clearly there's anytime, like he said, you see these channel trends of continual demand zones, then you've got a very strong trend established. And I might need to load in a little more data. There it is right there. So there's my support, about a 36,987. But you got a clear trend, a retest of a 37, and then we might come back down. But it's got to hold 37,176 if it's going to ever see this. But if this does hold, then we will see it retest back up. And once it starts breaking any of the supply zones, then you'll know that the trend has been broken. We're starting to see consolidation and possible reversal. Can other indicators be in the chart with this? Absolutely. That's what I was showing you on the other charts here, that these are, you can see quite a few other indicators that are being plotted in line with the existing tools. You can also use any other indicator if you like trend lines, Fibonacci's, or whatever that you like to add to those, and they absolutely can be used along with the zone. So if you have just simple volume, okay, where you're using just plain simple volume and you're trying to do a little bit of analysis, then if you have your zones in there, then you can see exactly where those supply and demand zones are, how they interact with your other indicators and so forth. So they're like any other indicator that can be turned on or off or used in conjunction with whatever else that you're trading. Okay. The zones are a very important part of your trading arsenal.
Now, just about swing trading and stuff, there's a lot of people that use these for swing trading, including yours truly. Mm-hmm. They're really, really good for swing trading. I use it for both the Forex markets and the futures, or I'm sorry, yeah, I would say ETFs personally. We have a couple people that I know use it on stocks a lot and ETFs, but they do really, really well on those markets too and on those time frames. So it's not just for the smaller time frames that these are applicable. So just want to stress that again.
Trying to go through a lot of these questions. There's so many.
I know, right? Yes, there is a manual supplied with the software, as well as multiple training videos in our video library. So we do try to provide a lot of training stuff, and we're always expanding the library, trying to give you the best way to simplify the process with these ideas and how to use the fractal nature of the zones. So I'm just going to answer some of these questions manually as I go down, because I'm so far behind on answering questions, it's not even funny. Like, you guys are amazing.
No.
The zones are based on fractal geometry and math of harmonics, basically. So vibrational mathematics. So yes, they are fractal in nature. They line up with Fibonacci's really, really well. So could you play your... No, that's stock stuff. Could you overlay it on a point and figure charts? Yes, you can if you want to. We're looking at market consolidation and expansion. So that's what we're doing, and it doesn't really matter what type of chart, just as long as it's a chart that you have in your platform, we can use the zones on them. It's going to be fractal in nature in that way. Okay, define risk. So when we're talking about defining risk, we're talking about the zones give us an area to say, hey, this is a support and resistance level, or this is a supply and demand level. This is how big it is. Even though this zone is on your chart from 30 days ago or 3 years ago. This is how big maximum risk you could take on a trade. Okay, that's the type of defining risk that this gives you, because we can see behind the bars in so many ways based upon how we're data mining these market events and keeping track of them for you and putting them on the right side of your charts. So you can use a zone to define your risk, and then you can trade from zone to zone. So you can trade from support up to resistance. Okay, so if your zone is 5 ticks big, your support zone is 5 ticks big, and as price is leaving the zone, you jump on board and your next supply zone is 15 ticks up, then there's your risk to reward predefined for you based upon what the market is telling us that support and resistance is in that market. Okay, and I do recommend trading in the direction of trend at all times. So,
Gabriel, how many years has the zones been around?
It's been in development for over 7, almost 8 years now.
Yeah, I was going to say 5+, but yeah, thank you for that. Appreciate it.
Mm-hmm.
The red-green dots that follow the price, is that SAR? No, that's part of the HAWKEYE software. It's called the trend and stops. This identifies when a trend direction has been established. So when it turns red, that indicates the price has moved to a point and has gone into a downtrend. And the lines overhead are the automatic trailing stop that follows the HAWKEYE methodology. All right. So when it's an uptrend, then it shows the green trend dots. And when it's in a neutral or congested trend, it shows white. That's a separate software package that you can find out more about at HawkeyeTraders.com. Do the zones incorporate fib levels? That's a good question. They don't per se, but let me see if I can pull this back up here. If you have the software on NinjaTrader, then there is a setting on your NinjaTrader zones that allows you to turn on the fibs. So that way it basically turns the tool on and it draws it from one zone to the next. So you can actually look at a Fibonacci retracement based upon the zone level. So either you can turn them on through the software. Right here, see it took these zones and drew it at a specific level. Or you can actually take it and oops, I removed it. Or you can actually take it on the drawing tools themselves and then draw your Fibonacci's using the exact same approach there. So you can do it either way. I messed up on that one though. Need to put it back on again. What's included for the price? The $697. Okay. What's included? You got your HAWKEYE zones and HAWKEYE zones time. Those are the two indicators that are part of today's purchase. Don't forget, there's the bonus 2-hour live training webinar with Nigel Hawkes himself. This going Wednesday, February the 17th at noon. It's a bonus that's included with your purchase, and you will receive the link to sign up for that. Thank you, Gary. Appreciate that. So what we are selling, the offer that we're making tonight are the HAWKEYE zones themselves. These are the colored supply and demand zones that automatically draw on price, and they automatically change color over time to show you the interaction of price with these supply and demand zones. So you're looking for when price reaches into a supply zone, when you see volume change like you see here, you already know ahead of time. Sellers are like waiting. They're sitting here waiting for price to get to this point to jump on board. When you see price push up, and then you can see volume telling you that it's turning red, and it's right inside of a supply zone. It's just sitting here telling you this market is going down. That's what it's telling you. Price, you got price extension, new highs, pivot extension into a previously defined supply zone. That's sell, sell, sell. And then what happens following that? You can see that about a day and a half later of nothing but downtrend. Retest, downtrend. Consolidation, push up, testing. Now are we going to push up one more? Or are we going to pull back down again? This price will give you that definition. So anybody that's taking shorts in this level, you're taking shorts against an upward pushing market, but with extremely low volume. So that's got to tell you something. A declining volume into that's telling you that this doesn't have a lot of upside potential. Okay, so you're watching into that. You're taking a short into this, and you're taking the short with risk only to just to the outer side of that zone. But your reward potential would be down to the lower side. Yeah, I did show IWM, but let me pull that back up here again. Yeah, here's the IWM. You wanted to see that for 1 hour? Okay. Let me pull over here and see. Do I have that? Here's an intraday one. Here's a 1 hour chart. IWM. Do I have the zones on that one? There we go. I need more data on that, I think. Still, yeah, that's about 30 days back. Okay. Overhead resistance is looks like it's right just under 104. Very good possibility to retest 100 in this level, but to come right back down, target being 97.09. Right there. So watch for it to break through 98.14 with an eventual target 97.09. The software, the dotted lines right here on the price, I think that's what you're referring to. That is a separate purchase from HAWKEYE traders. It's called the Trend and Stops, and it's part of several of the packages that they sell there. The basic package. It comes with the trend, the volume, and the momentum or heat map indicator here. A complete trading system that gives you definitive entry and exit points of when you see price defined as a trend and then you interface that trend with these zones themselves, gives you a formidable trading platform. Yeah, swing trading, yep, 360, 720, or 1440. So those are longer-term intraday trades. A lot of people will use a 60, 120, or 240 time frame, so absolutely. Personally, if I'm trading stocks, I like to trade stocks on the longer-term time frames, daily, 3-day, weekly, daily, 2-day, weekly, or a daily, weekly, monthly. I trade a lot of options as well, and so I'm using these zones to help me to place my price targets for my options contracts on my long-term positions. Excellent way to trade using options. Do zones from higher time frames paint on the lower time frames? Nope, you have to have a separate chart for those. On NinjaTrader, if you use NinjaTrader, then you can overlay a chart. So if you're looking at a rectangle, so if you draw a rectangle, you can make the rectangle actually multiple time frames. So I'm sitting here. I'll draw this rectangle on this time frame here, and then you can see that same rectangle will appear on multiple time frames, and it shows you the same demand or the same supply zone on these charts as it does on that chart. But that's just a drawing feature that's available already on NinjaTrader. And so you can make that, draw it directly on a zone on the higher time frame, and then see how that looks relative to your faster time frame. B, if you can't buy it right now, but you want to buy it later on, send an email to support@hawkeyetraders.com and request it. I'm not sure if they're going to hold this price and how long they're going to hold it for, but support@hawkeyetraders.com, request that you attended the webinar but you weren't able to get it at this price, and they might be able to work with you on that. Let's see, look at gold on a 240-minute. Okay, I'll be glad to do that. I've got a 240-minute right here. Let me go ahead and pull up gold on that. I think my data is clogged right now. For some reason, is your data on your Ninja clogged for some reason? I'm not sure why data's...
I don't even have my Ninja up, to be honest.
All right, I was going to transfer it over to you, but for some reason I can't seem to get the data to load into Ninja. Let me pull over to TradeStation and know it comes up there.
Let me open up my Ninja real quick.
Okay, yeah.
We've been having so many questions. I closed down everything except for the questions. And it still is choppy on my charts. It's crazy.
I want to go back a lot farther than that. Let's go. All right, so you wanted to look at, what was the symbol? Gold futures. Yes, Joan, I'll get to the ES 5-minute. I did show it earlier, but you might have missed it, so I'll go ahead and do that. So here is the gold on a 240-minute chart. Expand that out for you to see that. Let me pull the zones on here, which is the main thing you want to see. I can also pull the other ones off, so if I want to pull the other software, I don't need to have it on. Then you see the 240-minute gold interaction. Here is the initial formation. Here is our money bounce, price extension, buying volume coming into a demand zone. Price came back up. Initial formation, first hit, retracement, second hit, retracement, third hit. There, it became gold. So now you started getting back into a new trend. So here's the first, second, third, price came back out, retrace, buyers come back in, right back in, and then price takes off. And so you've got a price extension up into a zone. I don't have a pivot, and it's buying volume still. So you still have an upward trend of buying and building momentum coming up into this the trade. Okay, Joan, here is the 5-minute ES, S&P 500. I have multiple tools set up on this chart, but that's to help me to identify that. But let me pull up a simpler one, and then let me pull this to make it a 5-minute. It's a 60-minute now, but I'll turn it back to a 5-minute, so there you go. There's the same ES chart on 5-minute. Why do we use so many different time frames? Because it helps us to stay with the trend. If you use this as a 60-minute, I like to use a 60-minute because it shows me where the longer-term supply and demand are, support and resistance areas are. It also gives me an overall trend, a longer-term trend. I like to trade in the direction of a longer-term trend. It also helps to keep you out of chop. If you've been trading for very long, then you know that chop will kill you. Unless you like chop and you like to trade the range of the chop, then you're selling on the lows and you're buying the highs. So vice versa. I'm sorry. You're buying the lows and you're selling the highs of the chop region. But in this case, what we're looking for, you're looking for the longer time frames to give you the confirmation that the faster or shorter time frames that you're trading are valid. It gives you a much lower entry. That's right, much lower risk for your entry if you're trading in the direction of the prevailing trend, the longer time frame trend. Viola, the gearboxes has not been displayed on any of these right here. You have to go over to a tick chart. For example, right here is a S&P 500 showing the gearbox right here. This shows you the optimized tick speeds for the instrument that we are trading. Right here, these are the 4 optimized speeds for today. This is actually our tomorrow's speed, so if you want to write those down, then you can see these are the speeds for tomorrow. 1695, 3390, 6780, and 13560 are the speeds, the optimized tick speed settings for trading these. And so what you do is looking at these time frames. If you're trading off of the blue tick speed, then you take your entry and confirm with volume on your second time frame and your volume and zones on your third time frame, just to confirm the overall direction, price targets, and trade direction. So the 60-minute, this was the 5, but if I were to go back to the 60, there's no brown rectangle because the trend is so, oh, there is right here. You mean on the 5, or because this is the 60. It doesn't mean it's not strong. It just means that this one has been hit multiple times. See right here, 1, 2, 3, 4, 5. So it's been hit quite a few times. That's why it's turned brown. This price has only been hit once. See, price came out, back in, hit once, and it's out again. So that went from an aqua color to a blue color. So anytime you see a blue zone, then you look back at history and you see it's been hit one time in price. So this orange zone means that it's been hit 3 times. A purple zone, no, 2 times. It goes from blue to orange, orange to purple, and then purple to brown. All right, I might have those changed out. So let me look at this and see what the colors are. Yeah. Cyan, blue, orange, purple, sienna. The 4X hitbox, do you have it? Yeah, that's the brown, the sienna zone. Exactly. For me, I like to trade crude in the intraday, so I usually will trade on a 3-minute, a 6-minute, 12-minute, and I use a 60-minute for direction and confirmation. For time frames, you can use 4 times absolutely, but I usually use it for confirmation 3 time frames, and the 60-minute is the confirming setup. The zones are always there. You can turn them on or off at any time. The zones will appear anywhere from 3 to 5, so you can see there's 1, 2, 3, 4 price bars on this one when it first drew. It will vary based upon here. This one is 1, 2, 3, 4, 5. So this one took 5 price bars. So it will vary based upon the price action in the area or the volume that's coming up into that. So it will vary.
I really like this this question here, or comment, I guess I should say. Someone's drawing their own zones, and yes, this tool saves a whole lot of time if you're drawing your own levels. Mm-hmm. So, absolutely.
Because it does it automatically. Mm-hmm. Not only does it draw the zone, but it shows the interaction of price with the supply and demand zones as well. Absolutely.
And what time how do the zones draw and things of that nature? It usually takes, first off, we have to measure where consolidation is, okay? So when price starts to leave that area of consolidation, that's when the zone draws, all right? And it stays on your chart until price wicks through that zone, okay? Mm-hmm. Or closes below that zone or above the zone, on the outside of the zone, okay? So that's how long the zone lasts and how it's created. So it usually takes, just as soon as we identify the consolidation, it plots, and then as we, and then as soon as it gets retested, even if that's a bar later, then it will register that as a bounce on the level. Mm-hmm. So, and remember, there's actually the HAWKEYE time tool and the HAWKEYE zone. So we're trying to give you a good place and a good time to trade both, you know. So a lot of people just don't even watch the charts when the background's not gray, just because more than likely, you know, the big institutions are not going to be doing their thing. They're just going to be doing the nice little trend follow thing, or maybe it'll just be chopping around, but then lo and behold, you know, it's kind of like those news announcements. You always see these big news announcements at these times a day, and a lot of times we get the great retests of the levels at those times a day. And, you know, like, maybe you'll see, like, oh, you know, the news announcement says, I don't know, consumer price indexes should be good, but the market goes down, and lo and behold, on your chart you'll see price reloading into one of these resistance levels or supply levels, and then it shoots away from there, you know. And you're like, man, what was going on there? Like, the report said it was good. You know, and it went, trust me, I've been there. Like, literally how it works, you know. And when you don't see these levels, you just have no clue. Like, it just is like, well, what do you, why did it do that, you know? Like, where did that come from?
All right, I think we've got to get going here, Gabriel. It's almost 10 o'clock my time. I got to get out of here. But I'm going to put the zones back up last time. And what's included, HAWKEYE Zones Time, the following platforms it works on. There is a workaround for TD Ameritrader Thinkorswim users that they can use the NinjaTrader platform. Link your existing TD Ameritrade account to that, and you have a free solution to chart and plot on NinjaTrader using the software that you've purchased tonight. Okay, you get full access to the Traders membership site, HAWKEYE Traders membership site, all the user documentation, the training videos, all the product updates and customer support. 2-hour live training webinar included. HawkeyeTraders.com/target is the link to click on. It's in the chat box. Be sure and sign up for that. If you have any questions or comments, please contact HAWKEYE directly, HawkeyeTraders.com or support@HawkeyeTraders.com. All right, thank you very much for your time. I'll leave this up here just for a little bit, but I've got to get going. And if you have other questions, like I said, you can contact HAWKEYE directly at HawkeyeTraders.com or email at support@HawkeyeTraders.com. Thank you very much. You guys take care, and bye for now.